Hey traders, welcome to Charts and Coffee. Hope everyone's having a great morning, ready to caffeinate and dominate as we embark on a session with, I believe, a total of 4 FOMC chucklehead uh, appearances. I believe we already had Collins this morning. So for those of you that are wondering, Rog, how do I keep up with this? I mean, obviously tune into Charts and Coffee every morning, and I'll let you know what shenanigans are happening. We have Collins at 11:30, Kugler at 11. So 1, 2, 3, 4. There you go. So take a peek. It's all East Coast time, New York time. And that means that as we wrap up the morning session, as we go into the London fix, we're going to see the market impacted by, well, the chatter of the FOMC members. Now, why does this matter so much? Why is it creating the kind of chaos that it can create? Yesterday, Meester created a lot of volatility, and that's because we're on the fence. And I don't believe we're on the fence anymore. Jerome Powell's 60-minute interview, backed up with the clarity, quite frankly, of the Fed Fund futures, show that the March 20 meeting is going to be a hold. The only surprise we would get for March is that we actually get a cut, and that would be super bullish until traders and investors stop to say, well, why did they cut? Are things worse under the hood than we know? So they can't surprise, right? Because this turns into upside down land. If you think, well, even though we're expecting 80% a hold, why couldn't they cut? Because then everyone's going to start thinking, oh, things must be way worse, right? So there's a lot going on here, and it's mostly psychological. March is where the cut, for the most part, is waiting. Now, for those of you that were watching the price action this morning, as was I, if you take a look shortly after 7, take a look at how yields just went straight up. I should say yields went down as bonds went straight up. We saw the indices move sharply higher. I mean, what is that? Why are we seeing that kind of movement? And there is a quirky little 7 a.m. hot zone, and that was the mortgage applications. And the mortgage applications were lower. We are still in a bad news is good or bullish for the stock market environment. So every little bit of data that comes out that traders and investors can say, see, Jerome, you're breaking the economy. See, Jerome, you're slowing things down. There's a pretty good justification that we can either start maybe thinking about March cuts, but that's not what Fed Fund futures are saying. It just makes the May cut that much more likely. So that's the game that's being played with every single significant hot zone, most especially the ones that affect inflation and reflect inflation and jobs. All right, that's where we sit this morning. So as always, let's jump into the questions. All right, so first up is N. Lewis asks about Taiwan Semi, the 1-hour chart. We like semis a lot, whether that be, I mean, there's only, I believe, 3 stocks and semis that are not in uptrends. So ultimately, I need to see price reach the daily price movement range. That'll plot at 9:30. So once the 9:30 bell rings, the gray zone will plot. But I can tell you where it was yesterday, and it won't be that much different, maybe a little bit higher today, but it's going to be around 118.80 to 118. So imagine it's going to be a little bit higher once that plots. We'll see that for certain, but you can see on the daily time frame that when price does tend to move into that zone, it's been pretty good. Meester yesterday, by the way, I've been playing this with SMH. We have a number of members in the Sector Secrets Mastery that are long SMH calls, and Meester definitely kind of whack-a-mole this. You can see it hit the first standard deviation of the daily price movement range yesterday. But nonetheless, we're looking for movement higher in SMH. I'm with you. I want to be long semiconductors for sure. All right, Visa. All right, so Visa and Mastercard are both in the XLF. The XLF is monstrously bullish. It's a big reason why the S&P has been as strong as it's been. So what I want to remember here is that If I'm looking for a buy in Visa, again, it's the same situation. It's going to be roughly in that 273 down to 271 area. I would imagine that zone once 930 hits is going to be a slightly higher daily price movement range. But we most certainly, when we take a look at the Mastercard, Visa, and they're very connected, we don't want to be short these names as a general rule. They're both in uptrends. So picking a top is a low probability setup unless it's something that we see on a shorter time frame, maybe a day trade, maybe a 1 hour type trade. So overall, longer term daily time frame, we want to be buying dips in both Visa and Mastercard. All right, next up, David asks, on gaps up, like the S&P today, is there a way to ascertain if it will continue or retrace? So this is a true gap. There's two kinds of gaps. There's a vanilla gap. I just call it a vanilla gap. It's just an open that's above the previous session close or an open that's below the previous session close. But then we get this variety like what we're seeing today. David is mentioning we're not only opening above the previous session close, we're opening above the previous session high. And both those things in conjunction are really bullish. But bullish opens, really bullish opens, gaps tend to invite a little bit of fading. So be aware of that maybe in the first 1 to 5 minutes of the morning. But beyond that, David, we don't predict. There's no way. No, I'm sure there's some folks that will say there's a way, but not on the open, right? So here's what I would tell you. If you want to get, and this is a setup, right? It's not about predicting whether it's a gap and go or a gap and fade. What we do is once the bell rings, we'll see where the S&P is. And that's not for another 22 minutes, right? So we'll see where the S&P is. We're right up against 5,000. So what I'm saying is forget the gap for a moment. Just look at where we are and the structure of where we are. And then remember the gap is a secondary story. So this is not about the gap. This is about the fact that the 5-minute S&P is in an uptrend. The daily S&P is in an uptrend. And oh yeah, there's this gap. So I'll look at the candle from 930 to 935 to see if we hold the support of that or whether we break the resistance of that. And then that 5-minute range is going to give me a little bit more idea about follow through. There are some pre-market levels, we call them pre-market pingalas, that we are well above. If we are well above, I will also be bullish, but that takes a little bit more time. So the way to ascertain it is just to look for a setup with a high probability. And for me, that's just wait for the first 5 minutes and then see which way the follow through is. If it's going to be a fade, you'll see the 5-minute support break. But it doesn't mean it's a gap close. This is another mistake a lot of traders make, that if we open at, say, 5,000, which, by the way, if we stay below it, that's a ceiling, right? That's a resistance level. That's a psychological level. And if we bust up through it on the other side, north of 5,000, is likely to be a bunch of buy orders. So the market moves in the direction of the most stops, right? That's typically how the market moves, in the direction of the most stops. Remember, the market is an order filling machine. It's not out to get you, doesn't even know that you and I are out there, but it is an order filling machine. And if our orders are waiting with everybody else, we're just going to get swept up in that move. That said, 5,000's resistance, breaking up through it is going to be much like a potential slingshot kind of, we might hit it and then get rejected, wind back, and then whoosh. That's a lot of times how price action moves through major psychological levels like 5,000. Can you believe it? S&P 5,000. Oh yeah, I forgot. The sky is falling. Anyway, so there is, within the context of what's happening, it's hard to be bearish. But please, nobody expect price to move all the way down to 49.72 and a quarter to close the gap. It could. Is it likely? Let's just see what that first 5 minutes does. So I hope that helps, David. That's pretty much exactly what I look for in the morning. But it's got to be taken within the context of the trend. And as long as that 5 minutes up, I can't even think about fading the gap. Right? I'm going to presume that price in motion is going to stay in motion, and especially in the context of an uptrend, I'll look for follow through there. All right, Christian asks, KRE, what do we see? I love it. On the daily and the weekly, let's cover the daily. KRE is tricky because here, let's make this a little bit bigger. KRE is tricky because really what we have here is ultimately a regional bank ETF that's been struggling, and it's been one of the reasons the Russell has not kept pace with the other three averages. We are looking at still KRE in the bullish hemisphere. So this is what's difficult. If I had to pick a setup, there's something there. It's an oversold, slow stochastic. And by the way, this is less and less actually a slow stochastic. I'm still calling it that because the main premise of it was built upon that. But what I'm running on my screen is really not necessarily a classic slow stochastic anymore. It's a completely rebuilt calculation, but it's still built on a 21.3 foundation. But anyway, I would be bullish, and it is oversold, and it is neutral, and it's trying to get into the daily price movement range. But Christian, I think the issue is, before we get to what is the setup on KRE, I guess the question is, why KRE? And I think we all should stop for a moment. I know I try to, as often as if I'm going to follow my sequence, the first question's got to be, why KRE? Why not XLF? Why not any other regional bank stocks that might be relative outperformers? Why not the big banks, right? So I think the issue for me here is not whether or not it's buy the dippable. I mean, it is, but why, right? I think so many of us would be so well served by asking, why do I want to trade this stock? Because everyone else is? Because I have recent fond memories of a win? Because it's popular? Because I always have? A lot of times it's just a matter of those reasons and not trade this, not that, right? Which is relative performance. Is this name the one that has the best chance for upside follow through? But that being said, gray area, yes, it would be buy the dippable. If I were just looking at this on an island, sure, it would be buy the dippable. And if KRE is buy the dippable, then, so is the Russell. But let me again just contrast. Should I be focusing my time and energy on the Russell, or should I be focusing my time and energy on things that are in uptrends and things that have really nice follow through? Gang, we're right on the cusp of 5,000 on the S&P. We're once again knocking on the door of brand new highs on the NAS. So I guess that's a little bit where my head's at, which is, make sure that whatever is on my watch list has earned its way there. Yeah. The simple answer is yes. All right. What do I see on QQQ? I love this, gang. We're not asking for predictions. We're not thinking gut and thinking and feeling. I love it. So QQQ, same thing as I would see on the NQ. So Pierre, if I'm going to look at SPY, SPX, QQQ, DIA, I'm going to go to the more 24-hour, nearly 24-hour view. And some folks might ask, why, Rog? I'm going to have a better, more complete view of price action. And in the case of QQQ, SPY, SPX, I'm going to have more opportunity, because think about it. If my indicators and my price action are rolling along, 23 hours, I'm not having to have this abrupt start and stop like what would happen in the ETFs and stocks. And if I have this nice rolling calculation of price and volume and volatility on the future side, then that means that I'm going to have more and better opportunity once I translate that over to the alternative, which is in this case QQQ. So do I want to buy QQQ? Yes, I want to continue to find buy opportunities. But to your point about resistance, look at that gorgeous resistance at the automated Darvis, right? That's awesome. Now I'm running Darvis signals, but we've made the Darvis 2.0 available for free for years and years and years. You can grab it on TradingView. It's unlocked, or you can grab one of the free layouts we make available at the Simpler Trading website. So we've made this available to members for a long time on TOS, and you can grab it on TradingView. So look at that Darvis level. That's our resistance. It seems to encounter resistance at the current level. Yes, and you can see why. In fact, what if I told you that resistance dated back to a formation, a price pattern that completed on the 25th. And ever since then, there's been a level there. That's why I love these automated levels. So yes, and here's what's cool. We can buy the Darvis support, right? We can buy the DPMR support. The last and frankly the least of the setups for me is the actual breakout. So if you're thinking about, Rob, could this be a compression to expansion setup? I agree. It could be. But I hate the word front run, but I kind of want to get in before that because I can get in with a better price and I can get in closer to support. So in the anticipation of an uptrend is going to continue to make higher highs, rather than engaging at the higher highs, I will buy at the DPMR or the Darvis and or even the wave and go from there. So I like the long side, and I just need a little bit of weakness. Or if we end up busting up through that Darvis, which you have rightly, yeah, Pierre, good eye. There it is. Yeah. So I don't want to buy there. Okay. Next up is moving on. How does Qualcomm look? BLP. So if I take a look at Qualcomm, take a peek, and if you look at the semis, and I know I've been sharing, actually BLP, check out the free video that I cut yesterday. In fact, if you head on over to the Simpler Trading YouTube channel, many of you are on it right now, or you're on my YouTube channel, Raghee Horner. Head on over there, and yesterday's free video, what was it called? There you go. Where to buy the dip. I was pretty specific. Where do you want to buy the dip? And in that update, I share a view. I can't remember if it was the premium video or the free video, but I share a view of a layout like this. Oh, I guess I did not. I must have done the SMH and the premium. Anyways, I'll give you a sneak peek of what members got. Of all of the heavily weighted stocks, BLP, in the semiconductor ETF, high concentration weighted sector, Qualcomm, Texas Instruments, ADI, and Intel are a no-go. I'm not saying they can't rally. They certainly could. But if we're going to focus on trends, that's where NVIDIA, Taiwan Semi, AVGO, ASML, AMD, AMAT, and LRCX are going to come up at the top of the list because we prioritize trends. So not that Qualcomm couldn't bounce. I mean, certainly a rising tide could lift all boats, but why look at a boat with arguably a broken bilge pump, right? My boaters out there, you know what I mean? So now to answer your question about for an overnight position, we have a Darvis level and a minor low. You can see the little signal right there. Darvis minor low that triggered as price rallied through 142.14. So anything really above 142.14 is in that momentum follow through of the minor low off the Darvis. And that's doable. I would have liked it better if it had an oversold stochastic, which it doesn't, but that pattern is there. Not ideal, but it's definitely there. And as close to the 142.14 your entry can be, the better off, right? But again, I would want to focus on what's been already in an uptrend. So Java, I always want to focus on leaders, not laggards. Laggards have their own value, but they're laggards for a reason. So again, if I'm going to trade a laggard, and semi's a great question about that. I'm relying on NVIDIA, Taiwan Semi, AVGO, and the SMH sector to carry Intel, Qualcomm, Texas Instruments, and ADI with it. So they don't necessarily have their own strength, or they might play catch up. I'd rather buy things that are moving higher with the sector. But yeah, there's no harm in laggards. What I would actually say instead, Java, is play the SMH, because then you're buying the leaders and the laggards, and you're buying the entire tide, as I like to say. All right. Okay, gang, as always, thank you so much for being here for Charts and Coffee. I appreciate the time. I appreciate you putting in the extra effort before we get into the trading rooms. If you want to check out what I do, and if you like this kind of analysis, look, if you're, let me tell you who this is not for. If you like trading with your gut, if you're a momentum junkie, if you want action over actual results, not the room for you. If you want to play meme stocks, not the room for you. But if you just want consistent analysis and trades like what we do here in Charts and Coffee, come check out what we do. Now, I mentioned this because we do have a trial coming up. So for those who are saying, Rog, kind of want to kick the tires on your indicators. We don't do this often. We do this, I think last time we did it was about a year ago. So this is not something that's open all the time. I don't like open trials. I like a very specific time where we onboard new members so you get the best of the service. And that is coming up. So set some time aside. We'll be getting that information out to you all pretty darn soon. So as always, gang, good to talk with you. I'll see you tomorrow, same time, same station. And in the meanwhile, heads up, we got a lot of FOMC chuckleheads today. All right.